Hi everyone, and thanks for joining us for today's webinar on the Climate Bonds Taxonomy and Green Bond Database Methodology. I'm Katie House, and here with me today is Monica Filkova. Together we'll be talking you through the taxonomy and methodology. But before we begin, I'd first like to go over some basic housekeeping. The webinar is scheduled for 1 hour. The presentation will take about 40 minutes, and then we'll open for questions. You can submit questions at any point during the webinar by using the Q&A panel at the top right-hand corner in the webinar platform. All attendees of this webinar are muted, so questions can only be accepted written in the Q&A panel. This webinar is being recorded and will be made available to participants of the webinar and on our YouTube channel shortly. Right. So first of all, what are we going to go over today? We're going to give a quick introduction on the Climate Bonds Initiative and Green Bonds for those of you who are new to the Climate Bonds Initiative and possibly new to Green Bonds. So we'll go over that quickly to set the context. And then we're going to move on to talk about the Climate Bonds Taxonomy and our Green Bond Database methodology. So starting with Climate Bonds Initiative. Climate Bonds Initiative aim is mobilising debt capital markets for climate change solutions. So we do this in 3 ways. We try and act as a market catalyst. We put out policy proposals and we engage with market participants. We also inform the market, and this is particularly where the Green Bond Database methodology comes in. We do a lot of market intelligence, a lot of data analysis. The majority of that is publicly available to anyone in the market. A lot is published on our website. We've got a big sort of resources section. You can see on the slide here, there's just 3 examples of the reports that we put out. So we do some analysis on green bond pricing, post-issuance reporting, and the green bond market in Europe, but that is really only scratching the surface of the reports that we put out every year. We size the market, so we put out a state of the market report, which shows the size of the green bond market, but also the much broader climate-aligned market, which might not necessarily be green labelled. And then the third thing we do is we produce criteria for the green bond market and more widely for sort of climate finance. And this is where the Climate Bonds Taxonomy comes in, and then we also have the Climate Bonds Standard and Certification Scheme, which is a kind of fair trade like labelling scheme for green bonds. So we set criteria that green bonds can then come and be checked against to make sure they really are climate aligned. What are green bonds? Green bonds are debt securities issued by any entity that can issue a regular bond. And the differentiating factor between green bonds and regular bonds is that the proceeds are used to finance green projects and assets. So they're really a regular bond, but with green as a bonus feature. And the green is relating to the projects and the assets that back the bond rather than the issuer. So, and for example, an oil company could issue a green bond if they back it with entirely renewable energy assets, and that would be acceptable. And the green label, it really acts as a kind of identification tool for investors. So it helps investors to be able to find the bonds that are out there in the market, going to green projects and assets. And we've seen that this is a growing market. So we saw the first green bonds issued in 2007 and 2008, and they came from the development bank. So the EIB and the World Bank were the first green bond issuers in the market. Up to 2013, we had about 20 billion in total issued, and then it was after 2013, 2014, 2015 that we really started to see this market growing. We got the first corporates started entering and issuing green bonds in 2013, and since then you can see here by the splits up in the bar graphs that this market has really diversified in terms of issuer type. since it started in 2007, 2008. In 2016 and growing in 2017 and 18, we had the first sovereigns coming to market, and now they take up a small chunk, but they are quite present in the market now. Current issuance is standing at about just a bit over 130 billion. Last year we had just over 150 billion issued, and we're expecting to exceed last year's issuance by the end of this year. As well as issuer type diversifying, we're also seeing use of proceeds diversifying. So here this graph shows the percentage that different sectors of the economy have taken in terms of green bond issuance. So you can see when this market started growing in 2013, renewable energy really took a big portion of renewable energy was a big part of the proceeds that was backing green bonds. But now when we look across to 2018, you can see that is really diversifying. Buildings and energy are now taking pretty much an even split. Water and transport are also making up a fairly big chunk of green bond proceeds, and we're just starting to see the sort of more land use and industry and ICT issuer types coming in there. So we're hoping that's still an area to grow, but we're starting to see a few bonds in those areas. And market integrity in the green bond market is really important. At the moment, there's green bond principles, which it's kind of broadly accepted that a bond should be complying with the green bond principles, and it's pretty expected that there'll be some kind of external review to show compliance either with the green bond principles or with something that encompasses the green bond principles and is a bit more stringent. So what we're seeing at the moment is, you can see here on the bar graphs, the blue indicates the certified climate bonds, green indicates green bonds that have had an external review, and yellow indicates no external review has been done on those bonds. This graph is just a snapshot from Q3, but I think it displays quite nicely what's going on in the market. There are some bonds that don't get any external review, but they really are in the minority. Most get some form of external review, and there's quite a few out there that are being certified by Climate Bonds. So that's certification under the Climate Bond standard. Yeah, and the Climate Bonds Taxonomy is one tool that can be used to do this external review. So I'll move on to explain what the Climate Bonds Taxonomy is. So the Climate Bonds Taxonomy it's a guide to climate-aligned assets and projects. It really is like a catalogue of the projects and assets that we think can be included in green bond financing and more broadly in climate financing. It's a kind of a list of the projects and assets that we think are needed to be able to transition the economy to limiting global warming to well below 2 degrees. With this edition that we released in September, it's available in Chinese and English, and they're both online. We're hoping to put it out in more languages, and depending on demand, possibly Spanish will be the next one to serve to the Latin American audience. But yeah, we're hoping to get it in a few more languages so that it's really accessible to as many people as possible. And then just to talk, before we go into detail on what's actually included in the Climate Bonds Taxonomy, I wanted to talk a bit about who uses the Climate Bonds Taxonomy and how it was developed and kind of the history of it. So I think it's important to understand the kind of audience that this has been aimed at. So there's several different groups that the Climate Bonds Taxonomy is aimed to serve, and that's issuers, investors, banks, governments and municipalities, and also policy and informing policy development. For issuers, it's a guide to what can be included in a green bond. So there's still a lot of questions that we hear a lot of questions in the market, and I think a lot of different players in the market are still receiving questions, particularly from issuers, about what is acceptable to put into a green bond. They want some clear guidance on that. And this is particularly true when you start getting into sectors that are a bit less straightforward than the renewable energies, for instance. So when you start talking about buildings, what is a low carbon building? What sort of performance does it need to achieve to really be understood as a low carbon building? Or when you're talking about forestry or agriculture projects, what differentiates a climate aligned forestry project to one that might actually be carbon emitting? It's these kinds of questions that issuers still have. So we've really put it out there as a guide to issuers. For investors, it's also a guide, but kind of for them coming from the other direction. So they're looking for guidance in how they can make green investments, and they can consult the taxonomy to see the kind of questions they should be delving into on their investments, to understand the kind of climate alignedness of them. The taxonomy can also be used by banks for green tagging on balance sheets, and the same for green infrastructure pipelines by governments and municipalities. And then on policy, it's a really helpful tool to inform policy developments. And this is actually something that we're working on right now. So the European Commission has earlier at the beginning of this year, they set up the technical expert group on sustainable finance, and one of the tasks of the EU TEG, it's technical expert group TEG, one of the tasks of that group is to develop a sustainable finance taxonomy, with the first priority being climate change mitigation. And this taxonomy is similar to ours, where it's aiming to span across a number of different sectors, and give clear guidance on what can be included in sustainable finance. So Sean Kidney, who's our CEO, sits on the EU TEG, and we've been feeding in everything we've learned from putting together the taxonomy into that sustainable finance taxonomy, and it's been a really useful resource for helping with that discussion and helping to inform that development. The taxonomy has also been fed into national guidelines before, so it was a tool that was useful in the development of the China Green Bond Catalogue, and then also France has their own guidelines, and they've followed quite closely the taxonomy as well. Index providers use it, SPO providers use it, and the Green Bond Principles actually include it in their resources of helpful documents to guide green bond issuance. So on the history of the taxonomy, while this is a big update to the taxonomy, this is not the first time we have produced and published the Climate Bonds Taxonomy. In 2013, the Climate Bonds Taxonomy launched, and then sort of over that time and up to about 2016, 2017, usage grew, and then by about 2016, we started seeing usage becoming very widespread. And at that point, we launched the first version in Chinese, as we could see that there was a need for it in that market. Then during 2018, we've got a full review of the taxonomy, and I'll explain I think on the next slide, what this was based on. But the taxonomy was never meant to be a static document. We always recognised that it would need regular reviewing depending on market developments, depending on technology developments, and also depending on sort of latest climate science and climate policy. So in 2018, we've undertaken a full review of the document, and now that is up online on our website, and there will be regular updating. Alongside kind of the content of the taxonomy, we've also reviewed the format of it. It used to be an enormous Excel that sat on our website and wasn't necessarily the easiest thing to engage with. So now we've put this into much clearer tables, and we hope it's a lot easier for people to understand and use. So this screenshot shows what the taxonomy covers. I'm not going to go into a huge amount of detail under each sector just because of lack of time. What we wanted to do with this webinar is give you an overview of what you can consult the taxonomy for and what it covers. But if you're happy to take any questions on particular areas, or if you want to get in contact after the webinar, we can talk through particular areas. So the taxonomy it's split into broad sectors, and then underneath the broad sectors there's a detail on the types of assets and projects that we recognise as eligible for green financing. So in terms of sectors, we include energy, transport, water, buildings, land use and marine resources, industry, waste, and ICT. So we've tried to be as encompassing as we can. In some areas, there's not clear eligibility criteria, but there's a plan to be adding in eligibility criteria. But in most areas, there's guidance on what we see can be included in green financing. The taxonomy has, for ease of use, the taxonomy uses a traffic light system to identify eligible assets and projects. So every single line item in the taxonomy, which is basically at the level of an asset or project, has a green, orange, red, or a grey circle in it. Green indicates that a project is automatically compatible with low carbon economy and doesn't need to comply with any requirements. So by requirements, we might mean a GHG emission threshold, or we might mean showing that there's not fossil fuel backup, or we might mean the kind of GHG emission operation profile of the asset. But if an asset or project is marked as green, then we always recognise that that is compatible with limiting climate warming. And a couple of examples of green projects would be, for example, solar power, or something like electric vehicles. Orange indicates that this project could be compatible if it meets a certain screening requirement or threshold. So the majority of assets or projects that are listed in the taxonomy are listed with the orange circle, and then there is a screening requirement that relates to that asset or project. Red is indicating the opposite of green, and that basically no matter what the performance of that asset or project is, we don't see it could ever be compatible with a low carbon economy and shouldn't be included in green finance. So when Monica comes to talk about the green bond methodology, she'll explain that if there's anything marked in red there, then that would be a kind of automatic exclusion on our database. And then the final classification is grey, and that indicates that this is an area where more work is required, and we haven't been able to classify these types of projects at the moment. What is most likely that will happen with those types of projects is in future they will move to an orange classification, and we will have a requirement in there. So they're projects that they're not definitely not eligible, but we're just not sure yet of the requirement that would make them eligible for green financing. So they're kind of where more work is required, and those sorts of projects will be on our priority list to be developing criteria and talking to experts to kind of move them into one of the above classifications, green, orange, or red. Each table within the taxonomy has a heading that looks like this. So we have several different columns here. The first column indicates so at the top of the table we indicate the broad sector. So for example, energy. So we have one table for energy, water, transport, etc. And then the columns underneath indicate the broad theme. So whether that's under the energy, it might be something like solar, wind, marine renewables, etc. Under buildings, it'll probably be split into sort of commercial buildings and residential buildings or upgrades. Under transport, it might be private vehicles or public vehicles. So splitting them up by theme. And then we have two further columns, asset type and asset specifics. that breaks them down into even more granular detail. So, for example, under solar, we'll have solar, but then the asset type will be the actual solar panels themselves, and then another row may be the manufacturing. So we tried to really recognise all the areas of that kind of sector that would be eligible for green financing and might be proceeds you'll see coming into a bond. The next column is 2-degree compliant, and this is where the traffic light comes in. So we've marked whether it's 2-degree compliant with the green, orange, red, or grey circles. And the idea is that indicates how we see a project as being compatible with limiting warming to below 2 degrees. The screening indicator is then if a project is marked as orange, so compliant under some conditions, then the screening indicator explains those conditions. And the final column, certifiable, is an indication of whether those types of projects or assets are climate bonds certifiable or not, which I can explain a bit more on the next slide. So we have in the climate bonds, in the certifiable column, we have two different symbols. One is to show that climate bond certification is available, so that's a blue circle. The other is the criteria under development, which is a yellow circle. The climate bonds standards criteria take quite some time to develop, and while we have a program of criteria that are developing, we don't yet have certification available in every single sector that we cover on the Climate Bonds Taxonomy. So we wanted to indicate where that is an option and the criteria under development indicates where that will soon become an option. Okay, and then I think this is my final slide before I'll hand over to Monica to talk about the green bond methodology. But just to quickly explain how we have done this update of the Climate Bonds Taxonomy. Under the Climate Bonds Standard and Certification Scheme, we have a number of different technical working groups who focus specifically on particular sectors. So we have a forestry technical working group, we have a buildings technical working group, we have a waste technical working group, etc. We have about 10 or 12 different technical working groups. The technical working groups are made up of experts in their field, and we meet with them on a regular basis, generally via conference call, to talk to them about what is climate compatible in their field. I think the really important thing here is the Climate Bonds Taxonomy is not what Climate Bonds understands is climate compatible, but it's what this whole conglomerate of experts in their fields understand and have provided us with the information. We're the facilitator of bringing all that information together and putting that out in one document, which is the Climate Bonds Taxonomy, and then the various sector criteria come underneath that. But yeah, it's really been updated with all of this knowledge and all of this understanding. So I'll now pass over to Monica to let her explain about how the Climate Bonds Taxonomy relates to the Green Bond Database and also what the Green Bond Database is there for.
Hello, everybody. Thank you for joining. So we've been talking about the taxonomy, but one of the primary reasons that people join the green bond market is to indicate their intentions to transition to that low carbon economy. And sometimes it is the case that the assets and projects chosen don't quite achieve the level of rigor that we would require in our criteria. Our criteria, in that Katie was just talking about, are specifically aimed at identifying, verifying the assets and projects that are on a trajectory to full decarbonization by 2050 and limiting global warming to 2%, ideally aiming at 1.5%. That is an important part of the market, but the wider market is also playing a significant contribution to in this transition to a low carbon economy. So what we do when we look at the green bond universe is we say, okay, we've got a number of sectors that are identified in the Climate Bonds Taxonomy, but we have developed a separate set of criteria to determine which bonds from the labeled universe are most aligned with our taxonomy. So the Green Bond Database methodology is the document where we set that out, and we use these criteria to determine which bonds from the labeled universe we include in the CBI Green Bond Database. The methodology is available in English and Chinese at this point in time. So when we look at bonds, we start off by trying to identify the labeled bonds. We are not very fussed about labels, so most of the bonds we see are indeed called green bonds, but they're also sustainability bonds, climate bonds, renewable energy bonds, and so on, that may finance the same sort of asset. So what we do is we look through to the asset. We search for this label in a variety of documents. So it could be in a press release, it could be in the bond prospectus, which is the offering document for the bond. It could be in a second party opinion. It could be in a green bond rating provided by a rating agency. Essentially, what we want to ensure is that the issuer has gone to the trouble of labeling the bond as green, and it is therefore visible to the market as identified as the issuer is seeking to show that the assets and projects they're financing are climate aligned. We then screen for alignment to the taxonomy sectors, and I'll come back to this. And we evaluate also the allocation of proceeds. So we include bonds where 95% or more of the proceeds allocated to green assets and projects. We exclude ones that are not aligned or where we don't have sufficient information to make a judgment call. And if we're unsure, then we put the bonds in a pending list whilst we try to obtain additional information and decide which category a bond belongs to. In essence, we use the same traffic light system that Katie was talking about. So if you look at the methodology, the first part of it describes the process which I just summarized. And in the annex, there is a table of sectors that are put in green, yellow, and red sections. Anything that appears in a green section is an asset or project that we consider to be aligned to the taxonomy and would include in our database. Anything that appears in a red section we would consider to be excluded, so not aligned to our taxonomy, and we would not include in the green bond database. Anything in yellow, we essentially need to do a little bit more research, and usually that takes the form of consulting with our standards team and potentially with external experts. So when the first green shipping bond, which was financing LNG vessels, came to market, we reached out to a couple of technical experts. We talked to the company. We formed a consensus view on the reasons why we are prepared to include that green bond at this point in time, and also the conditions and requirements of keeping that green bond in our database, which is essentially focusing around reporting. So yellow essentially indicates that we've got an additional requirement, very much in line with what Katie was saying earlier. It's not an automatic inclusion or exclusion, but there may be a few additional things we're looking for, and in most cases, that would be some additional work required around the metrics for the project. In principle, the way we look at the universe, we look for alignment also to the green bond principles, green loan principles, specifically the reporting requirements. In terms of sectors, we look to the Climate Bonds Taxonomy. In terms of reporting, we look to the principles that have been identified by market participants as the GBPs and GLPs. One thing I would like to point out is that, again, we're more interested in the spirit. So sometimes issuers may produce a prospectus, and in the body of the prospectus, they undertake reporting obligations, but they do not specifically say, we wish to state that we will comply with the green bond principles. So what we're looking for is the issuer promising to report on allocations, which to us is more important than the format of how that promise is made. Likewise, in a lot of cases, as Katie mentioned earlier, there is a form of external review which confirms compliance with the green bond principles or the green loan principles. But we may also include in our database a bond which does not have an external review, but has otherwise got the right sort of assets. So those are aligned with the taxonomy, and ideally has either disclosed the allocation of proceeds up front or promised to disclose in subsequent reporting. So one of the things we end up doing as a result of this screening criteria is that we exclude bonds. Very often that's because the assets are not aligned to our taxonomy, and an example is so-called clean coal. So efficiency improvements on fossil fuel power generation are a category that is allowed, for example, under the green bond principles. There are catalogues, taxonomies out there that also allow for such efficiency improvements. Our view with respect to fossil fuel power generation is that it is always read always to be excluded on the basis that there are alternative technologies available for generating power that are compliant with a transition, or much more compliant with the transition to a low carbon economy. So we would exclude those. Sometimes we exclude bonds because more than 5% of proceeds are allocated to social projects. So, one of the observations we have for this year is the growing number of sustainability and social bonds. Social bonds usually just have social projects included in them. Sustainability bonds have a mix. Sometimes in sustainability bonds, there may be quite a significant allocation to green projects, but if the social projects are more than 5%, we would exclude them. And finally, we would exclude bonds if we are not able to obtain sufficient information on the assets to determine where the money is going. Overall, the volume of excluded bonds is relatively small compared to the entire universe, but we think that it's quite important to highlight both what we include and what we exclude and why we exclude it. Finally, I would like to point out that both documents we've talked about today are available online on our website. The taxonomy is available under the standard section. The methodology is available under the market section, where you will find also additional resources. So under the standard section, you can also find information on the different sectors, the sector criteria that are available for certification, as well as the ones in development and any that are in consultation. And in the markets section, you can find additional information on the green bonds issued to date, information on new issuers, market blogs, so on and so forth. Thank you very much.
Thanks, Monica. We're going to open for questions now. So just as a reminder, you can submit your questions in the Q&A panel, which should either be on the right-hand side of your screen or at the bottom of your screen. There should be a button that you can open up the Q&A panel with. So yeah, submit your questions in there. We've had a couple come through already. So I guess starting, well, maybe Monica, you want to take this and I can add it if you want. How is market integrity ensured in the green bond market?
Sure. That's actually a pretty good question, because one of the main ways to attract investors and grow the market is by showing them that there's integrity. And the way that's ensured in the market is that we encourage issuers to disclose as much information as possible on the assets and be as specific as possible on the types of investments. But we also encourage issuers to obtain external reviews. That can take a number of forms. So in the presentation, I mentioned, for example, second-party opinions that are provided by companies such as Cicero, Sustainalytics, DNVGL. There's quite a few of them now. And what they do is they review the issuer's framework and confirm compliance with the green bond or green loan principles. And they also provide a succinct summary of the eligible categories. There are also various schemes that have been developed by rating agencies, including some of the international ones, so Moody's and S&P, but also there are rating agencies in China, Japan, Malaysia, that provide green bond assessments. And again, they look at the assets, they look at compliance to transition to a low carbon economy, but they also confirm compliance with the green bond principles. And the third thing we encourage, and that's kind of why we developed the Climate Bonds Certification Scheme, is for an entirely third party to assess assets against specific criteria. That is perhaps the most stringent test available in the market, especially given that the criteria require annual reconfirmation that the asset and projects are still compliant with the original assessment, which brings me to the final point, and that is that we look for disclosure not just at the point of issue, but also ongoing disclosure. And one of the ways we check that, last year we started looking at post-issuance reporting. We published a report on post-issuance reporting. We are doing that exercise this year, and we're looking at what issuers are reporting in terms of allocations and checking that that is compliant with the original framework and what they promised to do. But we're also starting to look at whether or not issuers are providing impact reporting and what are they reporting with respect to, for example, GHG emissions. So as an organization, we're interested in increasing market transparency, making sure that issuers are held accountable really to their promise to sponsor the low carbon transition.
Thanks, Monica. Okay, next question. What are the changes of 2018 edition compared to the former edition in screening bonds, such as which kind of industry could be automatically recognised as green but before not? I think this question relates to the Climate Bonds Taxonomy, so I'll take it. There are a few more categories of sort of assets that are included in the 2018 version compared to the previous version. So, for example, we've now got shipping recognised in the Climate Bonds Taxonomy, whereas before I don't think shipping was in there. And that was a reflection of, for example, Monica mentioned us seeing the first shipping green bond coming out in the market. So that kind of prompted us to realise that we needed to give some guidance for the shipping industry. In terms of other changes, so I think that's one of the main sort of additions in there, but most of the other changes come under the screening indicator column. So where things have been updated, it's generally to give clearer guidance on the screening indicators that are needed for a bond to show compliance with the Climate Bonds Taxonomy. So a couple of examples of that would be in bioenergy and hydropower. I think on the previous version of the taxonomy, we didn't have clear thresholds. We just said that they would have had to shown that they were that they were kind of compliant with limiting their GHG emissions and not being too high emitting, because those types of renewable energies can be fairly high emitting. Whereas now we have a 100 grams of CO2 per kilowatt hour threshold that we apply to all different renewable energies. So it's kind of new, and the update has been much more refinement of the screening indicators rather than actually additional line items and things like that. The previous version of the taxonomy did cover the same sectors, so we still covered energy, water, transport, buildings, etc. But the granularity wasn't quite there. And the other thing I think we found is that it is really helpful for us to be as granular as possible about the assets and asset types where we're recognising can be in there, because for an issuer and an investor, they want the taxonomy to be as comprehensive as possible. They want to be able to see the exact types of assets that they might be investing in or issuing a bond against, rather than just seeing a kind of broad category that says transport. So yeah, we've tried to really be more granular in there. Okay, next question. As you track the labelled green bond market in your database, how granular is your breakdown of the different subsectors, e.g. hydro, solar or wind, receiving labelled green bond financing?
Right, okay, so in principle, we track the big sectors. So in our database, what we track is allocations to energy, transport, buildings, water, waste, land, ICT industry, and adaptation. We do keep a record of descriptors. So when the framework says that within the energy sector, the allocations would be to hydro and geothermal, for example, we do have a descriptive column. But in terms of providing statistics to the market, earlier in this presentation, Katie showed a slide of what sectors are being financed, and that is the format in which we inform the market. The reason we do that is to be able to provide a comprehensive, informative view about the overall allocation, splitting down to all of the various different subcategories, especially given that we are increasing the number of categories we're looking at, as Katie just explained. I think would make it a bit complicated in terms of overall reporting. But as I said, we do have information on subsectors.
Thanks, Monica. Okay, next question. Is natural gas considered as aligned to 2-degree scenario? This is a good question. This is something that gets raised quite a lot. At the moment in the taxonomy, we have natural gas marked with a grey circle, because we just need to do a bit more work there. The reason that we're not so other fossil fuels, coal and oil, are both are marked with red circles. So we would never recognise them to be eligible for green financing, and that includes things like clean coal. So where there's carbon capture and storage, and in general, if there's carbon capture and storage, then we're also not including that. Natural gas does appear in. So one of the things that feeds into the decisions we make in the taxonomy is the IEA's scenarios for transitioning the energy sector to low carbon, and other scenarios as well, but predominantly we look at the IEA's. And in all of those scenarios, natural gas has a role to play. So that is the reason that we haven't just said it's never going to be eligible. But the thing that worries us with natural gas is that there's a really high amount of methane leakage. There can be really high methane leakage. And with methane being an extremely potent greenhouse gas, there needs to be some really sort of robust controls on that. And at the moment, what we're seeing is that methane leakage is not properly being monitored. It's not properly being controlled. So we don't have a particular. It can be happening in many cases, and no one's really tracking it. So we don't have a particular requirement we can put there at the moment. But we are hoping in not too long to have some better guidance we can give on the natural gas question, because it is one that comes up a lot. And basically our rationale would be, if it's definitely going to be part of the transition to limiting warming to below 2 degrees, then we will recognise that it can be eligible for green financing in some cases, but we want to set robust screening criteria, and we just don't have those right now. Okay, next question. Many issuances list proceeds going to multiple themes, so I'm interested in how Climate Bonds breaks this down in dollars by subsector. Is this publicly available?
Okay, so I think definitely a database question. The way we look at allocating it across sectors is by the big sectors I mentioned a little while ago. And what we look at first is the issue of disclosure. So there are frameworks out there that are very specific, saying exactly what the money would be allocated to. They might even list exactly where the solar or wind farm is located. If in cases like that, we would reflect the actual allocation across the relevant sectors. So if a bond is financing a wind farm and a rail project, we would allocate to energy and transport. If there are no specific figures provided in the framework, what we would do in the absence of any other indication is allocate to categories pro rata. So let's say that same issuer had indicated 3 sectors, and one of the project was a solar farm, one of them was rail, and they also intend to invest in a commercial building. So in that case, without knowing percentages, we would split the proceeds 1/3 to each category. Now, that is at the point of issuance. In some cases, such as secured bonds or securitizations, we would know exactly where the money is going to, because it's secured on a very specific set of assets. So that's fixed for the life of the bond. In other cases, and that is the case usually with unsecured bonds, where there's an indication of what the eligible categories might be, we then look to the post-issuance reporting when that becomes available. And what we try to establish is what categories the proceeds actually went to. As a consequence, we might adjust the allocations to the sectors. And in an extreme case scenario, if we discover that the proceeds went to a category that would not be eligible, for example, we were promised, or the market was promised, I should say, that there would be no investments in fossil fuel power generation, but we discovered that actually 50% of the money went to a clean coal investment, then we would exclude the bond from the database. And the way that is then reported is all of these allocations are summed up at portfolio level. So that might be the bond market in general, or it might be country specific. And what that means is, in some cases, issuers will have allocations across multiple categories. We don't try to categorize the bond as a solar bond or a rail bond, unless all of the proceeds are really going to that category. And in fact, most of the time, even so, for example, a property company, you might expect that all of the allocations are going to property, but a property company might also be investing in creating a solar farm with significant input into the grid. They might be building electric vehicle charging stations close to the property, which is an investment in transport. So what we've discovered is that in a lot of cases, issuers allocate to multiple categories. I hope that answers the question.
Thanks, Melissa. What are the next categories of projects that will be open for climate bond certification among those that are not yet? So I can take that question because it's on the Climate Bond Standard side. So forestry has just really recently come out. So that might be one that you've not seen has come out. We released that a couple of weeks ago. And we're looking forward to seeing some certifications coming through there. So that one's just become available. The process that we go through with all of our criteria is they're developed by a technical working group and an industry working group, and they then go for public consultation. After public consultation, they are then approved by the Climate Bond Standard Board, and then they are fully released and available for certification. So bioenergy has been through public consultation and should be coming out for available for certification in the next couple of months or so. So that one's probably the next one. After that, I would say waste but that one will need to still go through public consultation. So waste will be as close to being released for public consultation. And while they're in public consultation, I mean, we publish the fact that that's the stage they're at. We hold webinars. We really do try and engage as many people as we can. So if anyone's interested to comment on them, then look out for that on our blog. And then after waste, hydropower criteria will be coming out. And then groups that we've started more recently, so they're probably 6 months or so, maybe 6 to 9 months from going out for public consultation, are grids, agriculture, and shipping. So that's to give you a flavour of kind of what's coming next from us. And then the next question we have is more of a comment, really, but I can comment back on it. So for orange projects, some screening indicator data are very detailed and may not be easily accessible in practice. So I can comment, and maybe Monica can comment as well, because this is something that we find a lot. The level of detail that is available from a green bond issuer can make it very difficult for us to make a properly informed judgment about whether it's complying with the taxonomy or the methodology. In the taxonomy, we have tried to pull a balance together of thinking carefully about what level of detail is going to be available, but we don't want to, but at the same time not compromising the climate credentials. So we've tried to put in the most simple indicators we can that still indicate good performance on a kind of greenhouse gas mitigation basis. And this kind of problem of interpretation between the taxonomy and actually when you start comparing it to green bonds is one of the reasons that we've produced the green bond database methodology. So maybe I'll let Monica comment as well.
Yes, so I'll give you one example, but it's actually a more general comment. Historically, we were looking at hydro from hydropower generation from a point of view that small is good, run of the river is good, big is bad. But science has moved on, and the current thinking is a bit more nuanced than that. So whilst run of the river is essentially still considered the least likely to have an impact, it is now acknowledged that both small and large hydro may cause problems, have negative impacts, and likewise both may be okay from an environmental and social point of view. So that more nuanced approach is reflected in the updated taxonomy. And in the taxonomy, there are certain metrics that are suggested for hydro. In doing the green bond screening, in an ideal world, every issuer would report those metrics, and we would be perfectly happy to include or exclude based on the metrics, but as you point out, that may not be available. So the way we look at issues is we're trying to determine what is most likely to be the case. We try to obtain information from public sources, but we are more likely to include a hydro project in the Green Bond database, even if we don't have the metrics. However, what we would always say, and this is where the market block kind of comes into play, because we use the market block to inform the market how we look at circumstances like that. So a typical comment that would appear in that particular case is we'll look forward to the post-issuance reporting to see the actual metrics and see further information on how the project is performing. So we acknowledge that sometimes we may not have full information, and from a database methodology point of view, we do take a somewhat more relaxed view of the criteria. The criteria, remember, are to ensure 2-degree compliance. As I noted earlier, we support the wider transition and acknowledge that there is an interim period where some issuers might not be able to meet that, or may not know that they should disclose that they are meeting that metric. But we are still keen on using them as an example of a company transitioning to a low carbon world. And once, so for example, for hydro, one of the other metrics that we've started looking at recently in more detail is any controversies surrounding the project. So for example, we recently had a case from the US where the project was built in the 50s. There was a court case around flooding of Indian tribal lands, and that court case ran for about 40, 50 years, something along those lines, but it was settled, and it's been about 15, 20 years, if I remember correctly, and there have been no further complaints about it. So we took the view, yes, there was a controversy, it's been resolved, it's now okay. And that was something that was reflected in the market block. So I would encourage you to have a look at that, see the cases we bring up, because that provides further insight into how we view transactions.
Thanks, Monica. So that kind of brings us to the end of the webinar now, and I'm afraid we didn't get to every single question. There was just a few too many, but it was great to have everyone's questions. And feel free to follow up. You can email us at Climate Bonds to follow up with further questions if you'd like to. And yeah, please do take a look at both the Climate Bonds Taxonomy and the Green Bond Database Methodology online, and the other resources that we have. So thanks again for attending this webinar, and thank you very much for all your questions.